Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at Oklo.
If you find our talks useful, please consider subscribing, liking, and commenting underneath. Let's jump right in. Tech companies are hitting a massive physical wall right now.
Oh, absolutely. A literal wall.
Right, because they are realizing that even if they buy up every single available wind and solar contract on the market, which they are trying to do,
Yeah, they really are.
they are still facing this massive baseload energy deficit for their data centers. Because, the sun goes down, the wind stops blowing.
But those artificial intelligence training models do not stop running.
Ah,
Ever.
exactly. The scale, the power required for these massive server clusters is just staggering. They demand an absolute continuous torrent of electricity.
We are basically looking at a fundamental bottleneck in 21st century infrastructure. Software innovation is vastly outpacing the physical power grid's capacity to support it.
It's moving so fast.
It is. And to solve this baseload deficit, the tech industry is being forced to look toward one of the most heavily regulated, controversial, and complex sectors on Earth.
Next generation nuclear energy.
You guessed it.
Today we are analyzing a company sitting right at the absolute center of this collision, Oklo. They are a pre-commercial advanced nuclear technology firm, and our mission today is to just cut through all the extreme market noise.
And there is a lot of noise.
So much noise. We're cutting through that and the technical jargon to analyze their highly ambitious 2027 commercial rollout. We're going to look at their technological blueprint, the volatile market sentiment surrounding the stock, and the formidable regulatory hurdles they still have to clear.
Setting the baseline for Oklo requires looking at a financial reality that might actually shock traditional investors, especially those used to analyzing legacy utility companies.
Brace yourselves for this one.
Right. Currently, Oklo has zero reported revenue. Zero. They are operating entirely in the development phase. So evaluating them on standard quarterly earnings metrics or near-term profit margins is completely useless.
It just doesn't apply here.
Exactly. The entire investment thesis relies on their long-term technological deployment. That and the regulatory moats they have spent the last decade building.
Okay, let's unpack this, because the technology itself is the absolute foundation of that thesis. Oklo is designing what is known as the Aurora fast reactor.
Which is very different from what most people picture.
Completely. For anyone visualizing legacy nuclear plants, the massive, sprawling facilities with giant concrete cooling towers taking up hundreds of acres, that mental model has to be completely discarded.
Throw it out.
The Aurora is a small modular plant. It's designed to output somewhere between 1.5 to 75 megawatts of electricity.
And that specific output range is highly, highly strategic. It is not designed to power a grid for an entire state. It is sized perfectly for dedicated, localized, reliable power.
So we're talking about taking one of these modular reactors and dropping it right next to an industrial manufacturing site.
Yes, or an isolated military base. Or, crucially, a hyperscale AI data center.
Right. And the decentralized nature of these units completely bypasses the need for massive, long-haul transmission infrastructure, which, as we know, is a major pain point for grid expansion today.
What's fascinating here is the term fast reactor itself. That is the critical differentiator in their design. Most traditional nuclear plants operating globally today are light water reactors.
Which means they need water, a lot of water.
Massive amounts of it. They use the water to act as a moderator. It physically slows down the neutrons so they can successfully sustain a fission reaction with uranium-235. Fast reactors operate on an entirely different physical principle.
They strip away the water moderator?
Exactly. By removing the water moderator, the neutrons are allowed to move at high speeds, hence the term fast reactor. This higher energy state allows the reactor to split heavier isotopes like uranium-238 and other transuranic elements.
And we should clarify, this is not some unproven science fiction concept, right?
Not at all. Globally, fast reactor technology has accumulated over 400 reactor years of operational history.
400 years?
Yep. The United States actually ran a highly successful experimental fast reactor, the EBR-2, out in Idaho for decades. So Oklo is essentially modernizing and commercializing a very established, proven physics model.
And that modernization strips away a lot of the classic dependencies you find in legacy plants, which fundamentally alters the safety profile. The engineering data highlights these Aurora reactors as inherently safe. They use a walk-away safe design.
Which is a huge claim, but the physics back it up.
Right, because they do not rely on highly pressurized water for cooling. You eliminate the risk of the water boiling off and causing a catastrophic core meltdown.
The safety mechanism is actually built directly into the metallurgy of the core itself.
How does that work?
Well, if the reactor experiences a complete loss of external power, or if the system just gets too hot, physics takes over. The metal fuel naturally expands as it heats up. This thermal expansion physically pushes the radioactive atoms further apart from each other. And when they are pushed apart, the fast neutrons can no longer sustain the chain reaction.
So it just stops.
Exactly. The core naturally chokes itself out. It safely cools down without a single human intervention. No active pumps, no backup diesel generators kicking on.
That is incredible. And understanding that passive safety mechanism really leads to the most compelling aspect of the Aurora design for me. Because they utilize fast neutrons and don't suffer from the same neutron poisoning effects as light water reactors.
These units can run for 10 to 20 years.
10 to 20 years without needing to be refueled. You construct the reactor, you turn it on, and it provides uninterrupted baseload power for up to 2 decades.
And it gets better.
Oh, right. The primary fuel source they plan to utilize is recycled nuclear waste.
That's the kicker. Traditional light water reactors only extract a tiny fraction of the potential energy from their uranium fuel before the physics requires the rods to be swapped out.
Leaving behind massive stockpiles of spent nuclear fuel.
Right. Waste that still contains an immense amount of latent energy. Fast reactors can actually burn those long-lived actinides. So it is an engineering solution that simultaneously generates zero-carbon electricity while actively drawing down the legacy waste stockpiles that the industry has struggled with for over half a century.
That elegant engineering is incredibly compelling to look at, but the financial reality of building a 20-year sustainable reactor requires an astronomical amount of upfront capital.
It really does.
Doing that with zero current revenue is a precarious position. Oklo's free cash flow is deeply negative.
Very deeply negative.
They are relying heavily on venture capital funding and the cash reserves they secured when they transitioned to the public markets just to keep the lights on.
And without a dividend or a stock buyback program to support the share price, every single dollar of that capital is being aggressively funneled into 3 specific areas of research and development.
Clean power generation scaling, advanced nuclear fuel development, and their proprietary recycling technology infrastructure.
Right. They are burning cash by design right now. The goal is to establish the physical and regulatory groundwork required for that massive 2027 launch.
But the survival of a pre-revenue company burning through cash hinges entirely on its strategic assets. They need a safety net.
And Oklo has secured several key partnerships that act as that net while they scale. First, they hold a U.S. Department of Energy site use permit.
Meaning they have federal land earmarked for deployment?
Exactly. Furthermore, they have secured an initial fuel supply derived from that legacy fast reactor program at the Idaho National Laboratory we mentioned earlier.
But the most critical asset they possess isn't the physical land or even the initial fuel supply. It's their decade-long engagement with the Nuclear Regulatory Commission.
The NRC, yes. Oklo was the first advanced reactor company to achieve NRC combined license application acceptance.
And we need to be very clear on the regulatory phrasing here. Acceptance does not mean they are approved to start pouring concrete tomorrow.
Oh, no, definitely not. It just means their application was robust and complete enough for the NRC to officially begin the grueling, multi-year review process.
Navigating that bureaucratic maze is a massive barrier to entry for any competitor trying to enter the space. Companies like NuScale or consortiums trying to build massive traditional reactors are constantly fighting regulatory friction.
It's a nightmare for them. So Oklo's early start with the NRC, dating all the way back to 2016, gives them a significant chronological moat against new market entrants.
Here's where it gets really interesting, though. Translating that regulatory moat into market valuation is where things get highly turbulent.
Very turbulent. The market sentiment points to wild psychological swings among traders handling Oklo's stock right now.
Because valuing a company with a futuristic vision but absolutely zero immediate cash flow creates severe pricing friction. You have traders pricing in the massive upside of the AI energy deficit, clashing directly with the immediate reality of heavy capital expenditures and long developmental timelines.
And that volatility is compounded by broader macroeconomic and geopolitical headwinds.
Right, the Middle East.
Exactly. The entire uranium and nuclear sector has faced downward pressure recently, largely tied to escalating tensions there. When global energy markets get spooked by supply chain uncertainties, it drags down the valuation of the entire sector.
Even a company like Oklo that plans to use domestic recycled waste.
Exactly. The market paints with a broad brush. Consequently, the overall mood in the financial coverage right now is decidedly neutral to cautious.
Looking at the impartial analyst coverage really highlights this tension perfectly. Barclays recently maintained an overweight rating on Oklo, indicating they believe the stock will outperform its peers over the long term.
However,
Right. Big, however. On February 24, 2026, Barclays slashed their price target from $146 down to $82.
wow, that is quite the haircut.
A cut of that magnitude is a massive reality check from institutional analysts. It signals a recalculation of the risk premium associated with first-of-a-kind or FOA technology deployment.
Yeah, in high interest rate environments, the discounted cash flow models for pre-revenue companies just get punished. Barclays clearly still sees the underlying momentum, but they are acknowledging that building the very first commercial fast reactor is going to encounter inevitable cost overruns and delays.
The path to that 2027 commercialization is going to be incredibly bumpy.
And the bearish perspective out there, like the notes from Seeking Alpha, targets those exact developmental hurdles. The bear case centers on two massive risks.
The first being extreme capital intensity.
Right. The upfront cost of engineering, licensing, and deploying a first-of-a-kind nuclear reactor requires hundreds of millions, if not billions of dollars before a single watt of electricity is actually sold.
And the second major risk is potential fuel supply constraints.
Yes. The fuel constraint argument is a major sticking point for critics. Even if Oklo perfects the Aurora reactor design tomorrow, they need a highly specific type of enriched fuel to run it at scale.
High-assay, low-enriched uranium, or HALEU.
Right. And historically, the global supply chain for advanced commercial enriched uranium has been heavily reliant on foreign infrastructure, particularly from Russia.
Which creates a massive bottleneck for domestic advanced nuclear deployment here.
It does. But the bear case regarding that domestic bottleneck was significantly altered by a major development just days ago. On March 9, 2026, Oklo announced a formal joint venture with Centrus.
Centrus is a specialized nuclear fuel and services provider, right?
Exactly. And this joint venture is explicitly targeted at expanding U.S. domestic nuclear fuel production and enrichment capabilities.
That is a huge signal. The Centrus JV is not just a strategic memorandum or a simple press release. It represents an active move to build out the physical enrichment infrastructure required to feed these next-generation reactors.
It demonstrates that Oklo is actively trying to vertically integrate or partner their way out of the supply chain choke points, rather than just waiting around for the federal government to solve the domestic fuel deficit for them.
So, what does this all mean? For anyone tracking Oklo's trajectory over the next 3 months, traditional financial metrics like earnings per share are completely irrelevant.
Throw them out. The catalyst calendar is entirely focused on operational and regulatory milestones now.
Q1 2026 will be defined by updates on how quickly the Centrus JV is transitioning from a corporate agreement into tangible fuel production capacity.
Right, alongside further progress in the NRC licensing timeline.
If we connect this to the bigger picture,
Well, all of these individual catalysts are playing out against a massive macroeconomic tailwind. The White House currently has a $9.7 trillion portfolio emphasis focused on broad energy infrastructure.
yeah, $9.7 trillion.
With a T.
With a T. The federal government is heavily incentivizing domestic nuclear development through various grants and loan programs. It creates a highly supportive environment for companies willing to navigate that initial regulatory framework.
And the ultimate goal of navigating that framework and deploying the technology is to secure long-term power purchase agreements, PPAs, right? A PPA is the financial engine that makes a pre-revenue infrastructure company viable in the long run. An AI data center operator agrees to buy a guaranteed amount of electricity from Oklo at a fixed price for 10 to 20 years.
Those guaranteed contracts are what unlock the massive debt financing required to actually build the commercial reactors at scale.
Exactly. An institutional bank will not lend $1 billion for a science project.
No way.
But they will lend aggressively against a 20-year ironclad contract backed by a AAA-rated tech giant looking to power its AI clusters.
And once the reactor is built and operational, the economics scale incredibly well under a PPA structure.
Because the Aurora reactor runs for up to 20 years without refueling.
Exactly. The day-to-day operational and variable costs are remarkably low compared to a natural gas plant that is constantly purchasing and burning new fuel subject to global commodity pricing. The high upfront capital expenditure transitions into a low-maintenance, high-margin asset over its operational lifespan.
Synthesizing the financial data, the market sentiment, and the tech, The overall investment thesis derived from the analysis assigns Oklo a bullish score of 7 out of 10.
7 out of 10. But this is categorized strictly as a multi-year hold strategy.
Oh, absolutely.
Mhm.
The short-term stock volatility, the geopolitical jitters, the psychological swings of day traders, that is largely considered priced in at this point.
The true value proposition rests on their regulatory lead with the NRC and their ability to execute on the 2027 timeline for that first commercial reactor.
Oklo is basically functioning as a crucial test case for the entire advanced energy sector. They're attempting to prove that advanced modular nuclear technology can be deployed safely, economically, and on a timeline that meets the explosive baseload energy demands of the AI boom.
The sheer capital intensity could still present massive hurdles.
Definitely.
But their strategic assets provide a unique buffer against competitors. It is a high-stakes convergence of cutting-edge physics, intense capital requirements, and stringent federal regulation.
And the outcome of Oklo's 2027 rollout will likely dictate how we power the digital infrastructure of the next several decades.
Whether you are actively tracking the energy markets, investing in the AI supply chain, or just simply analyzing human infrastructure, this is the inflection point for commercializing next-generation baseload power. You really need to be paying attention.
And as we wrap up today, I want you to consider the broader implications if Oklo's model actually succeeds.
Yeah, think about this.
If we can successfully power the most advanced artificial intelligence systems in the world using recycled nuclear waste, contained in self-cooling reactors that run untouched for 20 years.
It fundamentally rewrites our historical relationship with nuclear energy.
Exactly. The hazardous byproducts of the 20th century could become the essential fuel that powers the technological advancements of the 21st, and that fundamentally alters the global energy market forever.
It's a wild thought to end on. Thanks for joining us today, and we'll see you next time.